I wanted to let you know how 7+% mortgage interest rates are affecting the Cincinnati housing market. And number two, how it may affect your plans for your move, whether you're buying, selling, or doing both. And number three, what you can actually do about those circumstances. I'm Patrick Grosser with the 513 Flat Fee Real Estate Group at Fathom Realty. So you may be aware, if you've been paying attention to the local and even national real estate news, that interest rates on average right now are 7.5% roughly. You can certainly do better or worse than that depending on your credit and if you shop around and find a good deal. But it's affecting buyers and sellers. So if you're thinking about a move and you have to buy or sell or do both, it's going to affect any of you in that situation. The impact on buyers obviously is that it's less affordable to buy a home the higher interest rates go. Of course, historically, 7.5% interest rates are not the highest they've ever been. However, home prices are the highest they've ever been. Inventory is very near the lowest it's ever been. So we do have a problem with buyers not being able to find the home that they want, and when they do, it's almost not even affordable for them. So a lot of buyers have given up. A lot of buyers have decided they're going to wait until interest rates go down. By the way, if you're thinking about maybe waiting on purchasing a home, I did a video here, I'll link here, that's called The Cost of Waiting to Buy a Home in Cincinnati. I let you kind of decide what you think is best for you, but I certainly have a strong opinion. I run some of the numbers there actually to let you know what that's like if you're going to wait or if you buy right now. But the impact on the market not only affects buyers and their affordability, but it also affects sellers, of course, because sellers are impacted by fewer buyers being in the market. They're getting fewer showings and fewer offers. Now, if their home is marketed properly, then they're still going to get showings and offers, and often even multiple offers in the right situation. But it's generally a slower market for sellers than it has been in the last couple of years due to fewer buyers being out in the marketplace. So overall, the rates are causing the market to kind of stall a little bit. Generally, not quite as bad as when the MLS went down and basically paused everything for a couple of weeks. But generally speaking, in terms of the national numbers, we're predicting about 4 million transactions in the real estate market compared to about 6 million the year before. So we're seeing a huge drop in the amount of activity, which really has more of an impact on real estate professionals, whether it's agents or lenders or other service providers, more than it has an impact on the average person. But you do need to be aware of what you can actually do in this current marketplace to make sure that you succeed, that you can achieve your real estate goals. So now that you know how 7+% mortgage interest rates are affecting the Cincinnati housing market and how it may change your moving plans, whether you're buying or selling or doing both, the question becomes, well, what can you actually do about it? Well, I don't really think that you should try to time the market. I don't think that's a good idea in the real estate market or the stock market. I think the correct thing to do is assess carefully what your housing needs are. Do you really need to make a move? Do you really want to make a move? And if you do, because you have a legitimate housing need, or maybe you legitimately don't want to rent anymore, you're tired of not gaining equity, you're ready to be a homeowner, then I think you should deal with the circumstances as they are, even if they're not desirable with the higher home prices and the higher interest rates. There are things you can do, like locking yourself into a fixed rate mortgage loan to make sure that your rates don't go up in the future. A lot of people are predicting rates are going to go down, but we don't really know for sure. If you can lock it in right now, make sure that you can actually keep your monthly payment steady, which is not guaranteed if you don't buy right now. If you buy later, or it's not guaranteed if you continue to rent, that your rent's not going to go up in the future. You can lock in your monthly mortgage payment with a fixed rate loan, and if rates go down later, again, we don't know if they will, so budget based on the numbers right now. And if interest rates go down in the future, you can always crunch the numbers, see if it makes sense to do a refinance to lower your monthly payments as well. And my advice for sellers is the same. Don't try to time the market. There's plenty of qualified, motivated buyers right now. Sure, there will be fewer showings than there were the last couple years, but that doesn't matter if a much higher percentage of those showings are converting to offers, as we've been seeing this year. The buyers that are looking right now are very motivated. They're not motivated by lower interest rates. They're motivated by a legitimate need for new housing. So you're going to find those people are just as willing, maybe even more so in some cases, to give you the price and terms that you want for the sale of your home. If you have any questions about navigating the market right now, whether you're buying, selling, or doing both, feel free to reach out to us through our website, 513flatfee.com. Click the link to schedule a call. We'll be happy to set aside some time to discuss your needs and how we may be able to help you to achieve your real estate goals. I'm Patrick Grosser with the 513 Flat Fee Real Estate Group at Fathom Realty.